We are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up EUR, CZK. We are on the 12-month time frame. Price action, last candle to the right-hand side is a bearish red candle. We do have price action overall, higher highs, price action overall, lower lows of structure, midpoint, also adding second level lows, third level lows, and fourth level lows. Current price is sitting at 24.00760. So if price work its way up, it can tag the resistance line in blue at 24.99396 before tagging the midpoint in that area, sitting at the numbers of 24.42364. If price action drops down, we are looking for it to tag the 8th, 9th, 10th, 11th, 12th, 13th, 14th, 15th. We're looking for a price action to tag the 16 market in the market, 16 candle in the market, which would be that bullish green candle spike down to the low, and market can make it to that area, which would be near the numbers of 22.88378 before tagging the number of the midpoint, which would be near the numbers of 23.48262. So let's take a look at what's happening in the market. So the market started off at a high and it pushed down to a low. So if that market pushes up from price action, market's creating that structure of an overall first, second, third, fourth retest. Market pushes up from a overall pattern of a double bottom and a retest or a triple bottom. If price pushes down from this area, it will be coming from what happened at the high. So, or I should say what happened at the midpoint. So when price action broke the midpoint, it came back to retest a few times. So we did receive that break, retest 1, retest 2, retest 3. Market's coming down from a double top and a retest or a overall triple top. Or that market can consolidate within that price action candle, but we can see it's currently below that. But the candle that we're looking for price to really break out of is that 16th candle in the market, if I'm saying the number right. So we're looking for that market to break out the top side of that long spike down to lower that bearish red candle. So anything within that area is consolidation. So if we had put this, if you shade this area in and create this as a zone, what's happening in that market is identifying that it did spike down into that zone for that first, second, third, fourth retest. We'll see that market come up, as we said before, from that double bottom and a retest overall triple bottom. Working our way down to the 6-month time frame. Price action on a 6-month time frame is reading as a bearish red candle, very small, looks like a doji, so it's consolidating. We was looking for the break of the second last candle, definitely a third last candle on the 6-month time frame. Market did break that area to the bottom side of the third to last candle. So market just spiked it a little bit, but it's a doji, so it's consolidating. So we have to see in that market, is it going to push down further? Is it consolidating, or is that market identifying a reversal for that market to come back up? Working our way to a 3-month time frame. Price action, same candle, bearish red candle, doji. It still looks the same, but if we take a look at where price coming from, we have multiple pushes to that high. So that market is identifying that it is coming from that first, second, third, fourth double top. Received a retest, market pushed down, and we are looking for price to break, as I said before. On an earlier time frame was a 3 hour, is a third candle. On this time frame, we're looking for price to break below that fifth to last candle of the market, which is did, but is a doji. So we're going to see how far that market really pushes down or is identifying reversal. So we have to wait for the next candle to form, or unless this candle becomes active and push down, up, or just continue to create another candle and have that consolidation. Working our way to a monthly time frame, price action, monthly time frame, bearish red doji. So we can see price is coming from that double top here. So market identified the break and a retest, which will be identifying the first, second, third, fourth. We have a double top, bullish green candle, which is the price, second, third, fourth. Fifth candle, the market is a retest. We have a double top retest. The market did break through that support line, now turn to resistance. And now we're going to see if it's going to come back to retest, or are we going to receive that consolidation, or that market going to keep on pushing down with bearish red candles. Working our way to the weekly. Price action on the weekly time frame is reading as a bullish green doji. So it's indecisive, side by side with the second to last candle. So we're in that consolidation. So that market did break down to another level. So once that market did break that level, we're going to see if it's going to come back to retest, or is it going to consolidate or follow up with another bearish candle to push that market down further. Walking down to the daily time frame is reading as a bearish red candle, spike down to the low. So when we see that market consolidating on an earlier time frame with the last few candles in the market, now we can see that structure is trying to form. So we have multiple spike downs in that area. So coming down red and green, we do have that first, second, third, fourth. Let's try that again. Let's get a smaller angle. So we have that first, second, third, fourth, retest one, retest. We're going to see if that market push up from that overall triple bottom, or triple bottom of the retest, or overall quadruple bottom. Price action on the daily time frame is reading as a bearish red candle, spike down to a low. So what's happening with that market is retesting the previous areas of that third, fourth, fifth, sixth, seventh, eighth, the last candle in the market, lost momentum. So it's identifying it may be a reversal. So we'll see if it follows up. So we're looking for a next candle to form to start breaking above the price action body and wick. Definitely that second last candle being that doji to push that market up to the next level, and so on. Working our way to the 4 hour time frame. So price action on the 4 hour time frame is reading as a bullish green doji side by side with the bearish red doji. So we're just looking for a breakout to the top side of that second last candle, or to bottom of that second last candle. Anything within that area would be consolidation. If we add the midpoint, we can see that price action is hanging out on top of that area. So what happened was that market did spike down, lost momentum, came back up to second level highs in that area. If we draw that line through it, and we're waiting for that pattern to form to see if it's going to push up or consolidate sideways on second level highs, or maybe come back down to the midpoint or drop down lower. So we can also see that we are between the SR lines. So let's put our midpoint between the white SR lines, and let's create a zone around that area while we're on this 4 hour time frame, so we can see what's happening near price. So near price action, we can see that price action, price in the last few candles in the market has went into that area of that zone. So it's tagging that area of support multiple times. If it pushes and breaks out from that second last candle spike down, we'll see that first, second, third, fourth, retest one, retest two, market push out of, and coming from that quadruple bottom, unless the market breaks through the midpoint and it can retest the bottom of that SR line within that midpoint of that zone and push down further. And we're looking for a break and retest on that SR line as we created, and if it breaks out to the outside, we look for a break and retest towards the outside. But so far, we're just waiting for that market to break to the top side of